welcome back. You are watching Insight, and it's time to talk finances. We've got Heather Foster here with Foster Financial here to give us some more great information. It's always a pleasure to have you here, Heather.
Good to be here.
Yeah. Now, look, first off, before we get into our conversation about stock market harvesting, how are the stock markets doing?
They've been doing really good this year.
Yeah.
To a lot of people's surprise, we came into 2024 wondering if we would see, we had a full rebound in 2023 of 2022's downturn. So, the expectation was what was going to happen in 2024. We've seen the markets continue to rise. There's been some volatility in recent months, but we've hit record high after record high after record high this year, which is why we should be talking about harvesting. When I get those phone calls, and it's very rare that I get the phone calls because my clients are very well trained to understand, we invest for the long term and we as advisors are very proactive with harvesting. But if you get a phone call and the phone call goes something like this, hey, I'm a little worried about the markets. I really want to get out. Usually we get those calls when the markets are down. There's a, bloodbath, if you will, of stock crashes going on. There's bad news in the press. And people go, oh, the markets are down. I think they're going to continue to go down. Get me out. That's the time that I actually have to talk them out of harvesting and say, hey, it's not the time.
Yeah.
But when there are record highs after record highs after record highs, if you are someone that tends to make those phone calls to your advisor that says, get me out when the markets go down, the time to get out are when you're at record highs. So one, if you are someone that's looking at becoming more conservative, you've been on the fence about being in the market if your allocation is correct, I would say, first of all, listen to your financial advisor. They know more about your story than what I'm talking, but emotions can drive people to make bad decisions. So if you were somebody that was making phone calls to your advisor in 2022 and begging them to get you out of the market, it might be a good time to look at harvesting, which means sell some of those stocks at record highs, not record lows, and get out and maybe get more conservative temporarily or even permanently if that's kind of your goal. Yeah. So again, it's more of taking the emotion out of it and saying, well, if you're going to get more conservative, when is a good time to do it? When the markets are at record highs. So you're harvesting those profits off the table. Yeah. The other thing is just harvesting in general. We sent out an email to our clients back in July and said, hey, if you manage any of your own 401k money, because we manage, money in the stock market for people, but sometimes they have outside accounts. So they're still working, they're still contributing to 401ks that we cannot actually manage directly. We're sending out emails and saying, hey, look at rebalancing those accounts. Take the time to go in and look at your 401k and rebalance. Sometimes when the markets continue to get higher and higher, your stock piece of your portfolio gets bigger and bigger. So you kind of need to slice off that creme de la creme, if you will, off the table there and kind of put things back into order. So the timing to do that, again, is at record highs. So harvesting, looking at your 401ks and actually taking some of those profits off the table and repositioning is a big piece of it. The other thing is market cycling, kind of in general, would suggest, based on an inverted yield curve and many other factors, that, we may head into a recessionary territory in the next 12 to 18 months. It could start as early as this last quarter of this year. It could start in 2025. But market cycling would suggest that we would head that direction. So again, if you're at these record highs, trying to get that little bit more potentially if interest rates go down may not be worth the risk that you're taking. So if you are someone who's trying to time the markets, I would just advise them to really look at that and say, okay, are the markets high enough now to look at repositioning? So repositioning also may look like not getting out of the market, but putting things in things like buffered funds, where you're hedging yourself, still staying in the market, but hedging yourself kind of on the downside. So instead of taking the full risk of the S&P 500, maybe the first 10% of any drop from this point this year till next year, you wouldn't take that hit, and then they put a cap on those buffered funds. So buffered funds are pretty popular, and they watch things like the NASDAQ and the S&P. It's a good way to stay exposed to the markets if you think they're going to continue to go up, but not fully expose yourself if they actually, in fact, go down. So harvesting stock is really important to do at record highs. So we've been in and out of record highs for the last few weeks here. We hit some record highs kind of all throughout the year, so I've been harvesting and repositioning my clients all year long. But as we're heading into this, election cycle we've got coming up here, it's going to get a little probably volatile. Watching the interest rates could bump the markets a little bit, but again, nothing that will be sustained for a long period of time because we've got other issues in the back end going on. People don't have as much money in their bank accounts at this point. All that free COVID money has dwindled. The spending is going to slow, which is going to have companies doing layoffs. As those layoffs happen, we're going to see the market start to get a little bit on the downward trajectory there. Yeah. That's what we're looking for is, okay, if unemployment rates start to go up, the new jobs start to decrease, that's signaling something to you. So if you're at an all-time record high, harvest, reposition, maybe get defensive at this point, maybe look at some buffered funds along those lines. Talk to your advisor. If you don't have someone to talk to, that's what someone like us is for.
Yeah, I was literally just about to say, to avoid that emotional kind of figuring things out, getting all of this information, that's why it's important to have people behind you like Foster Financial.
Exactly, because we're doing it behind the scenes, and we're letting our clients know, hey, in July we did a massive rebalance, and here's why we did it, and here's some of the changes we put into play to get a little bit defensive. Maybe we don't want to be as tech-oriented, we want to be more consumer staple-oriented. Knowing that someone's actually doing that work is imperative to you staying the course long-term.
Yeah. Thank you so much, Heather. You're always bringing some great information.
Thanks, Tony.
And letting people know, don't act out of emotion.
Exactly.
All right. Everyone, take a look at your screen right now. You can find out much more information about the great team over at Foster Financial. You guys, I know that sometimes when it's getting low, you can feel discouraged. But again, make sure you contact your financial advisor. Contact Foster Financial to be able to get those questions answered. We'll be right back.